Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we want to look at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at a last print of 1193.50 at the lows of the day on this Friday, the 12th day of November 2010. And just looking at yesterday's session on Thursday, with the bulls were really just fighting a bearish current. Obviously, you see in price, in terms of price, the market actually trailed higher, gapped lower, filled the gap, trailed higher, and actually closed right around our key measure of trend right here, as you can see in this magenta line. But as you can see from our proprietary indicators, our intraday dynamics, as they're called, the market was clearly bearish. And suggesting the bears were likely in control. And as you can see why. The market, again, now another point lower at 1192.50 at the low of the session. Bears remain in full control of the market, and as traders, we certainly love when bears are in control of the market. As you can see, a gap to the downside early this session, followed by a beautiful double top to retest the underside of the trend, just to simply confirm that the bears are in control, and then boom, move from 1208 down to 1193. So an impressive 15-point move or so in the market in the E-mini S&Ps. As far as a trade, the free ES trade, really kind of missed out on that this morning. Had we done the video this morning around this time, certainly we would have sent out some short exposure around 1205 to 1208, wherever the market was, 1204 to 1208. But now essentially we've missed the move. Definitely from here, from this vantage point, it's about 1:30 Eastern Standard Time. We're actually looking at probably a short setup around, you probably want to get it a bounce around 1198 maybe or so. We're at 1193 right now. 1198, maybe even 1200 would be good. Another favorable short opportunity in the market in the ES, because as you can see, the precursor yesterday, bearish. Now we are a full all-out bearish in terms of price technicals, trend, and all of our intraday dynamics as they were. So the bears do remain in full control. But having said that, we certainly are 8 points below the measure of trend right now in terms of price, so it's a little late to get in the move right now. But certainly the bears, as mentioned, are in control. Looking back, you can see a bit of choppiness. The bears were certainly in control around here. This is when they took control, was late in the session on the 9th day. This, of course, was Tuesday. Late in the session, the bears just took control. As you can see, all of our dynamics turned to the bear side. Trend, certainly price technicals, but the bulls just were a bit stubborn. I mean, they do have the longer-term trend on their side, so they're definitely going to be wanting to put more money to work. The problem is they just didn't really realize what was going on in the market, and they were just essentially fighting a losing battle. As you can see right here, they tried again on Wednesday, they tried again on Thursday, but really it just wasn't to be, as the trend certainly remains in full bearish control. Having said that, moving on, we're going to look at a chart of the daily, which should be right around, let's see, there we go. So there's a chart of the daily market. We're actually going to go to bearish, having missed for the first time in probably 3 years a trade, having missed the switch to bullish right around here, which would essentially, given this resistance, we staved off the bullish, and then just really wanted to wait for a pullback, never really got it. So definitely waiting for a move to get on the bearish side. 1220, the key level, as mentioned in terms of the S&P 500 cash market, the key level. We're now 25 points or so below that, so definitely going to be looking for a little bit move lower, followed by a lower high to be printed to get in on the bearish side. Probably with an anticipation of a move from 1200 to 1220, anywhere in that band, all the way down to, we'll call it 1150 to 1170 perhaps. So a quick 30 to 50 point move. Actually 50 to 70 point move probably is what we're anticipating in the S&Ps as we retrace this recent move that we've seen higher in the market. Of course, we do have the previous resistance around 1180, so we'll have to get through that. That'll probably be a good bump, a good bouncing point to get back up into the 1200, 1220 band and print a lower high to move lower and correct essentially the move that we've seen. Look at this beautiful negative momentum divergence in terms of momentum, much lower high, significantly lower high, but a much higher high in price. It doesn't get any better than that in terms of a selling opportunity in the market. Actually, let's see. We're going to see how I think the MRS-YM has been doing pretty well lately. This is some of our swing systems. There's the MRS-YM at a new high. As you can see right there, $45,000 in profit. and just a $7,500 drawdown. And this, of course, the venerable MRS-EM actually is underperforming just a bit the MRS-YM, and this is actually part of our MSA, Ultimate MSA Portfolio, MSAU, the swing component of what would be the MSAU DT. This is the $15,000. You add $5,000 on the $10,000 margin of the MSAU DT, subtract the DT, and you have the MSA with $15,000, and this, of course, is a key component of that relative outperforming portfolio. But that's on the swing side. In terms of sentiment, we're looking right here. Pretty impressive, impressively low sentiment indications as we're around the highs. Pretty low sentiment, suggesting the market was very complacent. We do expect the market to move higher ultimately, probably into next spring, January, February, March. But right now we do anticipate a correction. If we're wrong, we'll certainly get back in on the bullish side and let price be the final arbiter. Now, having said that, we did go through and look at, let's see, just to see what was going on. We'll pull this back up. We'll take a look at here. And what do we have here? Oh, that's a nasty drawdown for the spiders. But this is going to be essentially our daily market trader. Now, this trades various markets. This portfolio, essentially, if you will, this service, Daily Market Trader, DMG, it's now on the website. It's in addition to the daily stock and options, in air quotes, trader, the DST. This is Daily Market Trader. Trades various markets, oil, emerging markets. You can see the Euro Stocks 50, even trades Baidu, trades the quadruple Qs, the Russell, and gold and oil, and so on and so forth. We're going to go ahead and scroll through. So we got to look, and wow, these systems are really performing well on these markets. And there's that nasty error again. Apologize for that. And hope that wasn't up there too long. That can be distracting. $81,000 in profit, of course, commission and slippage deducted from these portfolios. We're going to scroll through really quick. Actually, we'll just look at the graphs real quick. Beautiful new highs that we've seen. These systems have been running probably for maybe 9 months to a year, just really outperforming. There it is on bonds. Trading. There's a bond one system, new highs. There's gold. New highs over $35,000. Emerging market, or the oil, not too well. Certainly putting up some profit. Emerging markets. Bond system number 2, again, new highs, almost $20,000. Had a nasty little drawdown there, but that's why you want to remain diversified. Amongst markets, the diamonds, a new high. DAX, performing well. Euro Stocks 50, beautiful. I mean, essentially straight up over the last, we'll call it since May of this year. Baidu really putting in the gains right there. You see $75,000 on the Baidu. And so we just decided, you know, what are these going to look like? We're actually going to go ahead and put these in a portfolio. This is a service. There's the Russell. We went ahead and combined these strategies, and this is what we came up with. As you can see right here, just go to the DMT. And really have updated a lot of the website in terms of a lot of varying portfolios, essentially following on, we'll get that off of there, essentially following on the best, offering the best systems. We probably have over about 60. 20% of those are probably just all outperforming. Actually, probably 25% of those are just outperforming, all at new equity highs. That's the MSA. That's the MSAU, the ultimate line of portfolios, which you can see here on the website. If you scroll through, take a look at all of those. Those are essentially the best performing systems that we have. Here's the Daily Market Trader. We combined those, $294,000. We just simply merge the systems. This, of course, would be offered to you, and you can of course, auto-trade it as well. 600% return, maximum drawdown of just 50%, $25,000 on a $50,000 portfolio. Here you see the slippage and commission deducted. That's what the equity curve looks like. These systems have been running again live since around this area, probably about 9 months to a year as we've continued testing. And there's the monthly returns of the portfolio. If you guys have any questions, also lesser drawdowns, beautiful systems. That these are beautifully performing well. If you have any questions, go to the website, chat with the support team live, or shoot us an email to admin@MiniAnalyst.com. Hope you've enjoyed it, and we'll see you next time.